Gym owners love the beginning of every year when those with the get in shape resolutions come knocking at their membership desks. And for a while, the gym is packed with new and longer term members, and it can get pretty frustrating for those who have made training a lifestyle. The good thing is that they know it's only a couple of months before many of these new members just stop coming. The new members start with good intentions. They become educated on different training methods and have laid out a plan to alter their eating habits that are congruent to their goals. Some even obtain the services of a personal trainer, and of course, we can't forget the small fortune that they spend on workout clothes. The majority soon realize that the promise of easy washboard abs in 30 days is a myth, and that it requires dedication and an effort to get any results. The desire to get in shape and the actual results many obtain are separated by a huge margin. In the end, the majority will go back to their old habits, and every year will gain about an extra 3 to 5% of weight. Now, they knew what to do to reach their goal, but they failed to act on it in a consistent manner. So they had behavior issues. Looking at trading, we can see a lot of resemblance to those who give up at the gym and those that blow up their trading accounts. New traders, they flock to forums, courses, and oftentimes learn some important trading concepts that may give them a slight edge in the markets. And really, a slight edge is all you need to make money. They sit in webinars and they buy trading systems that have proven themselves historically and in the current market environment. Trading platforms are researched, as are brokers, and each new trader settles with what fits their budget. Now, after learning their chosen trading method and understanding risk, position sizing, and have designed a trade plan, they set forth on their trading journey determined to make their mark. But in the end, the majority of new traders close their accounts and move on. Now, most of them had trading behavior issues. Now, is it fair to say that much of your success in trading has to do with behavior? Well, I think it is. Number one, your trading system. However you approach trading, you have a system or a method that you've tested, and it's shown to have a small edge in the market. Every variable is accounted for, and it's the sum of all the parts that make the system or the method a successful one. The problem starts when you start tinkering with things without testing the change. NetPicks has trading systems that have been fully tested not only by the developers, but also by those who purchase them. All systems come with a trade plan that are only released once they pass testing, usually past data plus forward testing in the live markets. Your entries, your stops, and targets are all laid out on the chart, and these are calculated from the current action of the market. The trading plans set forth times to trade and when adjustments are required, just to name a few items. So looking at this chart, you can see the system printed a trade setup and triggered, and it went to target. Now, what if you decided that you were going long right into potential resistance levels, as I have marked? Now, that's not part of the system, and you decided to skip the trade. What if you continued to add variables to the system that were based on theory and never tested by you? Your behavior while trading has taken the statistical edge from the system, and you are no longer trading the original system. Now, the system clearly worked here, but your behavior caused you to miss an easy trade, and as Murphy's Law would have it, perhaps a string of losses is just around the corner. So test your system, trade your system, and the plan that you've laid out. Number two, increased position sizing. Perhaps you just came off of a string of losses. Maybe you skipped too many trades that turned out to be winners. Whatever the reason is, you choose to increase your position size to an amount that a handful of losses can severely damage your trading account. Greed is real, and it does seem simple enough to add on a few contracts. Even worse, your behavior is rewarded by a large win, so you decide to continue to use a position sizing that will not withstand a run of losses. Nobody can tell you what to risk, as everyone has a different risk tolerance. Every system is different as well. You have to account for the probability of a string of losses, and what percentage amount per trade will have you weather that storm. Now, if you are seat of the pants with risk, your behavior of not following appropriate risk allocation will take you out of business. Number three, letting losers run. Virtually every trading system has a point where the trade is no longer valid and a stop out takes place. This chart here, it shows an uptrend, consolidation, and test of the lows, which equals the entry. Your system says to place your stop under where the test failed. Your system also says that after a breakout, the pullback is fine unless the move coming back is strong. If it's strong, you exit. So you decide that the uptrend is strong, and price did move quickly away after the breakout, but you're going to ignore the strong pullback. The problem now is price is back into your entry and is close to your stop, but since you're convinced of the move, you pull your stop. Price breaks down and your loss accumulates. If you're smart, you exit. If you think the market is going to come back on a retrace, I can tell you on this chart that it never does. Your loss becomes huge. What makes this worse is if you also increase position sizing on this trade. Now, you don't have to be the smartest on the block. You can be average, follow a proven method and a plan, and find success. On the other side, you can be the brightest and better capitalized, but if your behavior is not conducive to good trading practices, you will end up on the sidelines. Now, while I don't think 100% of trading success or failure is behavior related, it's a huge piece of the trading success pie. It may not always be easy to exhibit trading behavior that is on the side of a winner, but it certainly is something to strive to perfect. In doing so, you put the odds on your side.